The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, corn and soybean futures had a pretty decent start to the week on Monday, with beans leading the way, while the wheat market settled up fairly mixed. Cattle lower, hogs a little bit higher. A dollar index surging a bit to start the week as well. More harvest activity in the U.S., planting ongoing in South America. Not a lot of fundamental change, it felt like, in the overall picture, but again, some decent money flow to start the week. Let's talk about it. Joining us now, John Heimberg with Total Farm Marketing is with us for our market analysis. John, good to talk with you. First off, go Pack Go. Nice big win on Sunday. I know both of us were happy about that over the Texans. And then, hey, some of that Green Bay Packer green kind of bled into the grains on Monday, so we'll take it. I didn't see a whole lot in the way of fresh news, though. You mentioned this to me before we went on the air, options expiration later this week. So maybe that was a driver. I mean, what's your take on the grain trade on Monday?
First off, let's touch on one thing you mentioned. Let's go look at that outside markets real quick here. First off here today, 10-year Treasury notes breaking to new lows today, kind of continues to show increasing interest rates. We're back to the lowest levels since now July on those 10-year bonds. So even though the Fed has cut rates, the bond market's saying interest rates need to go up. That's kind of weighing on the equity markets. We're down about 380 today there. So that's going to be an interesting little side note. Keep an eye on that, because this is a very interesting trend that's kind of counter what the Fed is doing in terms of their mindset. So that keeps me very cautious of all the markets in general, just because with that move in interest rates, the dollar continues to climb. We actually are breaking out possibly of the dollar today, trying to get over the 104 basis point level, and that opens up the door to the top side because we take out the range on that. And that could be something we have to watch, as obviously we're in competition with the globe for exports and things of that nature. But yeah, getting back to your side of things too, in terms of what maybe have been a factor, November bean options are coming off this week, and that just brings a little extra volatility in the market. The market has a tendency to drift itself to the path of where the open interest is. And today we kind of hung out at 980 all day today. Now there was a lot of open puts, open calls at this level. The next biggest level is back up to the $10 handle. Obviously, with the sell-off that we had last week and the weakness there, we pretty much kind of unfortunately taking the $10 calls to the sidelines, but there's still a lot of put premium out there. The put owners in the soybean market are strong in terms of that ratio puts to calls. So that might be something that could give this market a little bit of lift this week. Unfortunately, when we've seen those types of runs in terms of options expiration, as soon as things are kind of taken care of, per se, we kind of come right back where we started the week at. So it could be a volatile week on that alone. The other side, too, that's been very interesting in both corn and soybeans has been the spreads. We are seeing bull spreading in corn, bull spreading in beans. Even if the market's been going down, we've been seeing less selling pressure in the November and December contracts. That's just a signal of a couple things going on. Number one, maybe producers aren't selling. I do think that's a factor, as harvest is just cruising right along here. They don't have time to shut down and go get corn to town. Number two, that means somebody's looking for product. Now that November bean spread, I finished at 8 cents today. That was pushing 20 cents just about a week or two ago. So it's really moved here. And number three, that also indicates maybe there's some transportation issues. The Gulf basis levels for both corn and soybeans has really been on the climb. We're shipping a lot of beans here. We're shipping a good amount of corn here, and they need those bushels down there. The Mississippi River at Memphis is low, so maybe we're seeing some limited movement. Talking to an elevator today, trains have been kind of in and out, but he's a little worried that the train car supply is going to tighten up pretty soon here to keep his bushels moving. So what could be a positive right now in terms of helping price could turn into a negative real quick if some of the logistics continue to fall apart.
You mentioned, maybe some folks looking for product, and you think about the export market. We've been getting a lot of flash sales here lately, more on Monday, corn to Mexico, South Korea, and unknown. Soybeans to unknown as well. Weekly export inspections, okay. I mean, you look at this export picture right now, John, beyond what we know, Mexico, for instance, who's in this market right now trying to buy up some fairly cheap corn and soybeans from the U.S.?
Yeah, then the corn side of it, obviously Mexico's been the biggest player, and they had that large purchase last week. So we'll see a pretty nice number on export sales this week on Thursday when that comes out. But again, don't forget we knew a good chunk of that,
Yeah.
from that big sale. So it may not move the market. It'll just still look impressive, but on the inspection side of it, we're watching really what's going on in terms of where these bushels are headed. Beans have had another really good week this week, 2.43 million metric tons, still trending a little bit under last year at this time frame, and still below the pace that the USDA was kind of forecasting. So we'll still have to watch it. Export sales for beans, a month and a half ago, we were the worst situation in 10 years. Well, now we've at least got to the fourth worst in 10 years. Okay. So we are seeing the numbers improve, still not to the level that we're going to need given the potential carryout that's out there, but it's at least enough here in this part of the market that it gets us a little bit if there's some demand for it. On the corn side, talking about those sales, first off, shipments for corn are great. We're up 31% year over year. USDA was only targeting a 9% increase. So that kind of tells you that maybe there's some adjustments coming down the road, or our window, as we tighten up and, as the Brazilian supplies or Argentina supplies become available, do we fall back and catch up to that target? But it's too early for the USDA to make any changes. But after the first of the year, if this pace continues, we'll see that come off that carryout in terms of improving the export demand. One of the biggest wrinkles we've seen, and you kind of mentioned this, just a surge in unknown destinations buying corn. So the question is, is it China? Who is it? Again, chatter about Japan. I've seen Europe has been in the market. Mexico does a lot of things unknown too, just so they don't tip their hand on how much is out there. I wish we could get a tag to every sale so we knew who they were, but at least we get the sale total and then we figure out the destination down the road.
In terms of the corn market, too, I know Dees corn did close above the 50-day on Monday. That's at 407. We finished 409 and a half. This market's been very range bound, though, John. Are we at a point where we're kind of capped out on this corn market, barring something unforeseen? What do you think as you look at the charts?
You watch the move today, 10-day moving average was right on top of us here, and that seemed to hold us in check. Maybe with the way the market's acting now, we're looking at some of those shorter term moving averages, kind of holding in place, especially with harvest going on in this window. Now, if we can get through that 10-day moving average, that opens us up. But really, I don't give you much of a topside ceiling. The last rally we had failed at the 100-day. And that 100-day right now today is at 419. So what are we looking at? A possible another 10 cents to get to that level. So that would be, I think, a possibility if we did continue to trend ourselves higher. In the bigger picture, we still got a declining market. We are building a bit of a bear flag here. So we'll have to see. I'm just kind of thinking maybe there's one more push coming. We get to that window where harvest is at a point where guys got to move bushels onto the pile a little bit here per se, and then we could see a break back down, retest the $4 low. Wouldn't shock me we go through there and really put ourselves a harvest low in, maybe possibly all the way back to the 385. But I think with enough stories out there, if we got that type of a break, I'd probably look to be a little bit of an owner. But maybe I feel more like this market's kind of trying to find a bottom point. Now we got a top point for that last rally. Let's start building a range.
Wheat markets on Monday kind of faded throughout the whole session. We started a little bit higher, but just didn't seem to keep up the momentum. Any big notes for you across all three wheat complexes to start the week, John?
Yeah, been nice to see wheat kind of get some footing today after that rough day on Friday. Instead, we finished basically right at the lows and down a tick or two from where we were on Friday's close. So keeps me a little nervous for that wheat market right now. We got that chatter about Russia setting up some individual selling contracts. So therefore the price is unknown. And when that unknown came out, that's what the market kind of reacted to. We don't know if they're selling at 250 a metric ton, 280 a metric ton. It's going to be kind of on the side type sales. And that just, again, just brings instability in terms of where market prices are. So then it comes down to looking at our demand. Export inspections for for wheat were below expectations this week. We're not seeing a ton of demand really coming like we need to. Throw in some forecasts for a little bit of rain in the HRW belt possibly coming, as we look like we got a little bit of a weather pattern change coming here at the end of October into the 1st of November. That just made it hard for wheat to get any traction today. And that may have also just limited that corn market as well in terms of an upside move.
We're talking with John Heimberg from Total Farm Marketing here today on Market Talk. Let's go over to livestock, John. Cattle trade kind of weak on Monday in futures, and I know we have a cattle on feed report at the end of the week. Cash trade was steady to firm, slightly higher even last week. You take a look at this whole cattle market picture. Are you worried we're getting a little bit top heavy here? Is there some concern this market could tip over? What are your indications as you look at cattle trade here starting off this week?
I've kind of felt that way for a while, been building a lot of defense here, especially for guys that got cattle in the front end here. Cash markets there still kind of rewarding with that 187, 88 bid for the most part last week. Retail values have had a nice rally. We're up to 320 on choice carcasses today at midday. But the cattle market just really over the last 2 weeks here hasn't responded a whole lot. So it feels like we're trying to round out a top a little bit here. We obviously hit trend line highs, just failed to get through them. The funds are sitting relatively long the cattle market here, so there is some room for them to make a break again if they wanted to turn into selling pressure. Really concerned with what the feeder cattle charts look like today. I was actually a put buyer in feeders today, just saying, hey, we got to reward this price value that we've seen here for both lives and feeders. I would use the put strategy side over futures here, just because if we're wrong, at least you got the upside wide open. Don't have to deal with the risk of the futures contract. But, there's been a pretty good move. You go look at the live cattle move, you're talking $12+ off the low to these levels. It's a good area to make sure you got some floor in. So I'm really curious to see how this goes. Is it going to be more of a technical trade? Is it going to be more of a fundamental trade? Seems like the fundamental trade is quieting. And then the technical trade, as we know, when that kicks in sometimes can really be set up for some difficult moves in the cattle market. Also, we're rolling the calendar to November here, just that time frame of the year that we do typically start seeing some weakness into the end of the year. So cautiously bearish has been my term for a couple of weeks in the cattle market. I still think that's out there. Just again, take care of your value and just be careful in case this thing decides to roll over. We really haven't had a correction here now since early September off those lows.
I just have to wonder if, let's say, the cattle on feed report coming up on Friday, if that could be the excuse, so to speak, that moves this market lower potentially if the fundamental support is not there. John, what do you think about that?
That's a possibility. When I'm talking about the fundamental support, the numbers are still tight. Okay. That's not going anywhere, but we've been pumping some big carcasses out there. Packers bids, it seemed like from talking to guys, were very tough to find last week. And I think we mentioned last week they were pretty much bought up for the front end and taking delivery, and they're not really putting their neck out on the longer end of things in terms of those cattle bids. So those are just that any declining momentum, I think, in the cash market. We found a way to be steady to $1 higher, but I think it was more steady, than, $1 higher, in terms of the trade. So if we start losing that momentum there, if a cattle on feed numbers come in line with expectations, a touch heavy, this market may feel like we've priced a lot of this in and could open the door for some weakness. Or on the other side, we could see ourselves a pretty quick correction before those cattle on feed numbers as the funds walk away, just saying, hey, good chance to take profits. And if we're right on cattle on feed, we've already got our money in our pocket. We can look to step back in again. If the numbers come in heavy, we're already sitting ourselves on the shorter side, pushing this thing lower.
On the hog side, fundamental support seems to be there again on Monday. I noticed this too, looking at commitment to traders. Looks like that funds are not too far away from the record long position they held in September 2013, so over 10 years ago. Talk about what you're seeing right now in this hog market, John.
Yeah, that's something that I noticed on Friday doing the commitment of traders charts and stuff I follow, and it kind of made me go, oh, okay, nice technical term, but it's a concern point when you see the funds really push out like that, and it's been a quick buying spree. We made this move, obviously, off those August lows, and here we are, $78 December. Looked like the market was fairly weak this morning. Did find some footing, at least got back up here. just like the cattle market, it's about 2 weeks behind where the cattle market is. Cattle market kind of started rounding off, hit those highs, started rounding over. Hog market's now starting to hit those trend line highs. So we'll have to see if we can push through, maybe a spread to start watching right now. We see you got seasonal coming up here to buy some summer hogs at, 95, 96. Maybe we get some seasonal lift against that December. And that might be something I'm going to take a look at too in terms of where that spread's running. But the front end looks a little cautious to me. Typically, we see the cash market and the cash index start trending lower into the end of the year here. Yeah, we still got $5 difference between December and the index. But again, if that cash market is starting to show some weakness, last week we closed under $84 on the index for the first time in about 5-6 weeks. So that kind of indicates maybe we're starting to make that move on that cash index, even though it was up a few pennies today. But if we start seeing that index trend down, that December hog contract, kind of like we said in cattle, we've had a nice rally without much of a major correction. It could be time.
John, any final thoughts you want to share or reiterate with folks today on the show?
Again, we got a couple weeks now till an election. Things are going to stay very choppy. Okay, that's going to be the biggest factor. It's going to be real hard to get a gauge on where things could be from day to day based on what the market's feeling about the election. Obviously, I think the week of November 1st, and when we get to the election, voting day, that's going to be just a mess. The market's just going to be really trying to position itself. So that may become the major driver in the next handful of days. Take advantage of rallies. Again, like we said, make sure you're protecting yourself if there's good value there. Just because we don't know how this market's going to react to whoever is put in office, here after election day.
John, folks want to reach out to you for a conversation there at Total Farm Marketing. How can they get in touch with you?
Love to chat with anybody anytime. Give me a call, 800-334-9779. Email is johnh@totalfarmmarketing.com. And don't forget to visit our website, totalfarmmarketing.com.
John Heimberg with Total Farm Marketing. Always good to talk with you. Thanks for joining us, and we will talk to you next week.
Sounds good. Have a great week, everyone.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkag and hit the subscribe button, or you can search for Market Talk Ag on YouTube.